The day after, the Fed kept rates unchanged and ignited the U.S. dollar to the upside once again. We are seeing mixed results in the U.S. dollar. We had the Bank of Japan interest rate decision last night, and they kept rates unchanged. They cautioned on further hikes. They said wage-driven inflation is still fragile. They acknowledged the yen weakness and downgraded the economic outlook, which is not good for raising rates. Their stance remains more dovish versus their peers, with the Fed and the ECB holding at higher levels. The BOJ actually remains the last major central bank with more of an ultra easy policy, and that has the dollar yen moving to the upside. Now the euro versus U.S. dollar has bounced off of some support levels, and the dollar is moving a little bit lower versus it. And the pound versus U.S. dollar have moved higher as well, but it has since moved to the downside. I'll go through all the technicals that are driving those three currency pairs in this video, so let's get started. Looking at the 4-hour chart of the euro, this week has seen a pretty steady decline to the downside, and the move to the downside got within a whisker or a breath or a shouting distance of this blue line. This blue line represents its 100-day moving average. That, of course, is a key moving average for short and longer-term traders in their view. If you trade above it like it did right through here and run away from it, that can start a pretty big move, and that's what we've seen in 2025 is a large move to the upside with the steps, with the last move to the upside being the longest, it looks like, but more drawn out. Since then, we've seen consolidation near the highs until this week, where the price saw price action move below the 100 and 200 hour bar moving average on the 4-hour chart, and then continue through other levels and getting out of this up and down trading range that kind of define the highs through here, and have now led to this move to the downside. Now we come to that point where it's decision time. Do we want to move below the 100-day moving average, or do you want to stay above it and start to rebound further to the upside once again? I have the Fibonacci retracement going from this low right here, the May low, to the high price that we saw in July, or end of June, I should say, and the 50% comes in at 1.14475. That could be a barometer for traders today. As you can see, we did try to move above it. The level also happens to correspond with levels that correspond with this area right here, where we had swing highs and swing lows through here. So it has an importance from a technical perspective for us. We're currently trading at 1.14403, so we're just below that level by about 7 pips. If it can remain below that level, then the 100-day moving average is going to be under assault, sooner rather than later, is my guess. And if we break below that level, we'll look toward the 61.8% retracement. Now, there's another tactic I could use, and that is if I were to take the Fibonacci retracement and instead of having it there in May, move it down to the low prices that we saw here in for the year. I guess the low for the year is down here at this point right here, toward the beginning, like January 6th or January 7th. Now, if we look at that, we're still away from the 38.2% retracement, so we've been in this trend-like move all the way through 2025. Getting down to 38.2% retracement is always a key barometer for traders to see if the sellers are trying to take more control. So that level happens to correspond with this 38.2 happens to correspond with some other swing levels, which included this low right here, and other swing levels going back in time. Let's say through here and here and here as well. So all this makes this level an important level. So if we do break below the 100-day moving average, I guess what I'm saying is that that traders will start to look toward this 38.2% retracement toward this level down here at 112.11 as a potential point where that's where we're going. So be aware of that. But this is a crucial area in trading here today and going forward. Watch that 1.13949 level. And in the short term, watch the 47 level on the top side. Let's take a look at the dollar versus yen next. As mentioned, the Bank of Japan did keep rates unchanged, and they concerned about growth, not all that worried about inflation. They, rates are still ultra low, so that's helping to weaken the yen. And as we can see in this chart right here, this 4-hour chart, the price did move up to test the 200-day moving average in trading yesterday. Well, today we're breaking through that 200-day moving average. That level comes in at 149.529. In trading yesterday, we also moved above this swing area right through here. I'll just draw it out, going through that level right there, which was corresponded with swing lows through here, and then it became a ceiling through here. We just moved a little bit above it, but used it in trading this week as a resistance level for rotating down. So yesterday we moved above it, so that was good. And then we came back down and retested that level right through here before moving to the upside, so that's good too. So the buyers are more in control, and we're also above the 50% retracement. This is of the move down from the January high to the April low. So we're getting above that 50%. We're getting above the 200-day moving average. So the end weakness is showing its phase even more. This all started last week when the price kind of found support against this cluster of moving averages down here and rotated to the downside, including the 100-day moving average here. So now getting above the 200-day moving average, and that's a bullish sign. On the top side, we'll look toward this high price right here, which was a high price going back to, I guess that's in April. That level comes in at 150.48. Above that, we'll look toward this swing area up here and the 61.8% retracement near 151.19. But the key barometer in trading here today, one that we want you to focus on, is 149.52. Stay above that, and the buyers remain in firm control. Move below that, we could see, a corrective move, but it doesn't take out the more of the bearishness that we've seen in trading this week. So be aware of that. We could see some support buyers near the 50% retracement level. Finally, let's take a look at the sterling versus US dollar. I mentioned that we did move a little bit higher, and then we moved a little bit lower. Now moving a little bit higher again. That moved to the downside. Came down to, what I had is a swing area. Got within shouting distance of it right here at this level at 1.3205. As you can see, this level corresponds with swing high right here, and then swing high right here, swing lows, swing lows, swing lows. Fell below it here, tried to stay below, couldn't do it, and then rotated to the upside and moved in this direction to the high price for the year. That level was tested in trading here today. It comes in at 132.05. The low price for the day came in around 132.10, so got within about 5 pips of that before bouncing up. We're currently trading at 132.36. The 50% retracement of the move up from the actually that's the April low. This trend move right here is at the 132.47 level, and that level will be eyed on the top side for maybe some resistance in trading here in the early North American session. If we can stay below that level, it's more bearish, keeps the bears in firm control. We can look down toward that 132.05 level, and then back down, then toward maybe this 61.8% retracement level down here at 131.19. If we do move above the 50% retracement, it doesn't take away from what we saw in trading this week. The sellers would probably still be in control. We move below the 100-day moving average. We wouldn't want to see the price move above that level, and we also move below this floor here. You can see it. I guess it's looks like a head and shoulders, doesn't it? Shoulder, head, shoulder. So broke below that level. That implies lower levels, and maybe that's the story for you as a technical trader. So there you have it. A look at 3 of the major currencies here. Sorry, a little bit longer than expected, but that's the way it is. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.